Hi, this is AAME with the US stock highlights here on Share Talk for Friday, the 19th of March, starting off with Atlantic American Core. And here you can see the nice, healthy looking gap to the upside. That would be good on its own, but we already had a gap above the 50-day moving average last month. That's that gap from the lows I describe as a rocket launcher, especially when it remains unfilled, as this one has. And at least while we're above yesterday's high at $4.59 on an end-of-day close basis, we're looking towards the top of this broadening triangle there from the beginning of last month, currently suggesting a target as high as $12 as soon as the end of next month. And I suppose the total break on the bullish scenario would be an end-of-day close back below the 50-day line at $3.84, but really $4.59 should be enough in terms of money management on an end-of-day close basis. Next up, a stock which is, I think, new to this particular sweep. Here we've got AudioEye, which sounds like a cool sounding company. We've seen that cool sounding companies tend to do rather well on the US stocks for some reason. Rather strange way of looking at a company, but that's that. Also, it's a cool company with a decent looking chart as well. We've got a broadening triangle here with the top of the triangle heading towards $49.20, which is a line of resistance from back in May, late April. Floor of the channel, or the triangle rather, running at $26, but at this stage, at least while we're above the 50-day moving average at $29.70 on an end-of-day close basis, we're looking towards the $50 level, and that could be seen as soon as the end of next month. If you are fussy about the stock, maybe wait for an end-of-day close through the initial March resistance at $30.68 later today, but I think enough has been done probably with the break of the 50-day moving average. Onto a stock which I covered yesterday, I believe, very recently anyway, this week. And the reason for doing so partly was, again, to do with the name, Allied Esports. Esports seem to be coming up rather strongly these days, and with good price action today, above the initial March resistance at $3.55. We're looking at a $5 target at the top of the rising trend channel from June. If you're a fan of the stock, you might be looking even higher, i.e., projecting that particular resistance line up towards $7, but I'm going for $5 first by the end of next month. Maybe $7 could be there for some time in May. Another new stock to look at, which is looking encouraging, Elector. Here we've got a situation where the shares have come through. The shares have gapped up within a broadening triangle. That triangle in place since the end of October. The resistance line of the triangle heading towards $27, and that's the target for the end of next month, while we hold above the initial March resistance at around the $19.15 level. So not a bad risk reward there on that situation. Only back below yesterday's high at $18.96 on an end of day close basis, really killing the bull argument, the breakout argument for the shares. But after that little bear trap that we had at the beginning of this month, it looks as though the stock is very much on its way. One of the better rises of the day so far, coming up in the form of Clovis Oncology. Here you can see that we've had a gap through, both the 50 and the 200-day moving averages, especially through the 200-day line there at 593, the 50-day line there at 682, and above that we're looking for decent upside as much as the top of this broadening triangle from May last year at the $12 level, and that could be seen as soon as the end of next month. So above the 50-day line, around $6.70, let's say, $6.80, looking towards $12 over the near term for Clovis. Stock which I mentioned as being a potential winner once we get through the pandemic, which we may or may not ever get, is Hall of Fame Resort and Entertainment Company. Here you can see the shares have very nicely broken that major resistance line there at from August. That was at around the $3 level, and broken through that very nicely. Now we've also broken through that peak, February peak at $3.35. At least while we're above $3, looking for as high as $8 at the top of the rising trend channel from back in September. And interesting that yesterday we had a sort of fake failure at that resistance line, and we did anticipate that the shares would actually move higher. So a little victory there for the technical analysis on that situation. On to Kirkland, which is not perhaps the type of stock you'd think would be sort of galloping around at the moment, but here it is, near the highs especially near the initial high of March. So looking for an end-of-day close through the $32.69 level. If we can get that either today or more realistically early next week, we could see the shares up towards $47, which is the top of a rising trend channel from last summer. In fact, I think that's back in June, and that could be seen as soon as the end of next month. As far as the stop loss is concerned, it could be as tight as yesterday's low at $27, just above $27 would do the trick on Kirkland's. Moving along to maybe the stock of the day, which is maybe the stock of the week, actually, the way it is. It's quite an interesting situation, especially if I can type out the right code here. MRKR is the code, and you'll see that it's Marker Therapeutics. What we've got here is an island reversal, which has played out quite a graphic way. So we gapped down and then gapped up. It's also a bear trap below the old January support, rather. And the view here now is that probably an end-of-day close back above the top of the gap there at $2.33 would be enough to allow us to project the shares up to the top of the rising trend channel from back in June last year at $4 as soon as the end of next month. In fact, with the gap, we're already on our way with the island reversal. It was an incredible island reversal there. But if you want to be cautious, then $2.33 is the place to go. Otherwise, probably you could risk down to just today's intraday low at $2.06 as the end-of-day close stop loss and target $4 already. But $2.33 plus would seal the deal in technical terms for Marker Therapeutics. Stock which I've covered before, but it's back again, which is good, is MOGO. Here you can see that we're just breaking last month's resistance, so an end-of-day close through $11.86 could be enough to get the shares onto a new leg to the upside, as high as $17.50 by the end of next month. Stop loss the last swing low, which was $9.41 on Wednesday. On to another firm favourite here, which is on the front foot at the moment, on Canova. Here you can see that the shares gapped up. They've held the gap so far. And at least while we're probably the best thing here is at least while we're above that last low there at 104, we're looking for the top of the rising trend channel from August last year as high as $2. Maybe tighten up the stop loss down to the 110 area, but at this stage, probably 104 is good enough, and that still leaves plenty of room for the upside at $2 over the next month or two. Just a few stocks to go now. The other esports stock, which I singled out just purely on the name of the stock, Super League Gaming. Here we've got the initial March resistance broken at around the $9.10 level, and above that on an end-of-day close basis, we're rushing towards the last target we chose here at $12. You could probably add a bit more onto that now, so by adjusting the resistance line projection, that would give us a target towards $15 on a 1 to 2 month basis. But at the moment, $12 initially, and up to $15 or $16 maybe by the end of May. Last couple of stocks now. This one doesn't look so familiar, I think. Here we've got XFOR Pharmaceuticals. Obviously, pharmaceuticals are doing rather well at the moment, but bounce off the 50-day moving average. That's around $8.80. And longer we hold that, the greater the chance of a move to the top of the rising trend channel from April last year at $14 plus. If you want to be more fussy on the stop loss, an end-of-day close back below today's low and the top of the gap at $9.30 would probably do the trick, and that's probably quite an attractive risk-reward for most traders. Finishing off with a stock which is has also appeared here quite recently and come up with the goods. In fact, it actually hit the top of the rising trend channel from that was November, hit the top of the channel there at $13.50, and now we're looking to see whether we can get any more out of it. I suppose an end-of-day close or a weekly close above $8, rather not $8, $12.80 would be enough to open up the prospect of a new leg to the upside as high as $20 by the end of next month for ZK International. Stop loss at this stage, probably the tightest, can only be back below today's intraday support at $10.05. That's it from me today. More updates next week.